Task Force on Climate-Related Financial Disclosure recommends companies to disclose their Scope 3 emissions. For the first time in 4 years, the Task Force on Climate-Related Financial Disclosure has issued new advice with revised recommendations for metrics and targets, requiring that all corporations publish Scope 1, 2, and 3 greenhouse gas emissions. The amended advice highlights 7 areas of cross-industry indicators as particularly essential for measuring financial impact in the new metrics and targets recommendations. Total Scope 1, Scope 2, and Scope 3 greenhouse gas emissions. Metrics on climate-related transition. Metrics on physical risks. Metrics on climate-related opportunities, capital deployment, international carbon price, and remuneration. This is the first time the TCFD has updated the implementation advice, which was first published as an annex to the TCFD recommendations report in 2017. The Task Force Climate-Related Financial Disclosure proposals are organized around 4 themes that reflect key components of how firms operate: governance, strategy, risk management, and measures and objectives. Its updated strategy recommendations include: for banks, expansion of the definition of carbon-related assets to cover energy, materials and structures, transportation, agriculture, food and forest products. For all companies, there were changes to more specifically address the disclosure of actual financial consequences on businesses, as well as crucial information on their plans to transition to a low-carbon economy. Also, there were modifications to handle the disclosure of possible financial implications on organizations more explicitly. The updated metrics and targets recommendations include changes to more specifically address disclosure of metrics that are consistent with cross-industry, climate-related metric categories for current, historical, and future periods as needed. Added disclosure of the extent to which relevant operations are aligned with a well below 2 degrees Celsius scenario for financial companies. Revisions to Scope 1 and Scope 2 greenhouse gas emissions disclosure for all firms that are not subject to a materiality assessment. Revisions for all firms to encourage the disclosure of Scope 3 greenhouse gas emissions. Added disclosure of greenhouse gas emissions for relevant assets or business operations for financial companies when data and techniques allow. Where applicable, all firms now have to disclose objectives that are consistent with the cross-industry climate-related indicator categories. Added disclosure of intermediate targets, if possible, for companies providing medium-term or long-term targets for all firms. The TCFD also published a status report which stated that overall transparency is still insufficient, despite substantial progress in business reporting and greater involvement.